I'm Taylor Riggs in San Francisco in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, women on boards. Goldman Sachs says it will not back companies going public if all the directors are white, straight men. We'll see how recent tech IPOs stack up under the mandate. Plus, the biggest bull, Wedbush's Dan Ives, says Apple could reach a $2 trillion valuation by the end of 2021. He joins us. And Poshmark's push. We'll talk social commerce and sustainable retail with Poshmark co-founder Tracy Sun. What shoppers and entrepreneurs want. It's in our special series, Retail Transformed. But first, to our top story. Goldman Sachs is making a stand against all white, all male boards. CEO David Solomon issued an ultimatum from Davos. He says that Goldman will refuse IPOs unless the company's board has at least one person who is not white, male, or straight. Goldman is the biggest underwriter of IPOs in the U.S. Joining us to discuss, Abby Adlerman of Boardspan and Bloomberg's Jeff Green in Detroit. Jeff, great story. Interestingly enough, this seems like this could be real change. Goldman has significant influence. They were the top U.S. underwriter last year, one of the top 3 in the last decade. This is more than a PR stunt. What do you think?
Yeah, well, even if there's never an IPO they refuse to do, what they're probably going to do is make every IPO that wants Goldman to underwrite it to have a diverse board. I mean, I think that's what's more likely to happen. They're going to, the tail's going to wag the dog into doing what it wants done rather than having to refuse business. So I think it's kind of PR, but it's also a real ultimatum that they'll be able to enforce before the company goes public.
Well, and we should make this clear, it's in the U.S. and Europe to start. So, Abby, I want to fold you in because the interesting thing here is that you're seeing a lot of IPOs come in the tech space. So this could have some significant ramifications, if you will, for the tech sector.
Yeah, that's right, Taylor. I mean, I think the pressure's been building for quite a while for people to pay attention to a lot of the ESG issues, and diverse boards is certainly at the lead of that. And I think what we're seeing is, as it relates to technology, where there's a lot of companies that are built up over time that aren't paying attention to these issues, all of a sudden the spotlight's on them, and they're really going to have to step up and pay attention to these pressures that they're getting from all different sides.
And Abby, it was interesting, we were talking about not having an all-white, all-straight male board, but the definition of diversity is changing as well. It's not just including women now. How do you see them also trying to include more diversity in the corporate boards?
Right. So, as we were talking earlier, the gender diversity is gotten most of the attention. First of all, it's easier to tell when you're looking at an S1. Usually. But also, I think it's because it was so disproportionate when you look at our society, employees, customers, shareholders, the disproportionate gender issues. However, there's a lot more attention being paid to different types of diversity, which has a lot to do with why is diversity important to begin with. Mm-hmm. And the value of diversity being more around bringing in other perspectives and having a good, constructive, maybe a debate, but nonetheless a healthier, more value added to that board when you look at it through a few different lenses. And that's why diversity really matters.
And Jeff, you were taking a look at this story. David Solomon saying, of course, focusing on July 1st on the U.S. and Europe, but notably excluding Asia. And we talk about technology. A lot of the big tech IPOs are coming from Asia. Is Goldman Sachs maybe not going far enough by excluding Asia from this conversation?
Well, a majority of their business is in the U.S. and Europe, so they're kind of hitting their core. And Asia's complicated. I mean, if you think about it, by the criteria they set, every board in Asia is already diverse because it has a predominance of Asian people on it, which in the U.S. counts as diverse. So when you start to talk about diversity outside of the U.S., it looks a lot different because we look at race. Most of the rest of the world does not consider race the same way that the U.S. does. And, as you were saying, for most of the world, gender is the diversity. But, by that measure, Asia still looks pretty bad. So, I mean, if they were to extend this to Asia, I'm going to guess there's going to be more IPOs that would have trouble and maybe more resistant to this, which is maybe why it's taken a little longer for them to bring Asia in.
And Jeff, I wanted to get your thoughts. We talk about now including diversity in the IPO stage. What about before that moment, the founding of these companies? Yeah. How do we start to include this before we get to the IPO stage?
Well, you got to figure out how to fix funding. I mean, when you look at the scarce amount of money that's available from diverse funds to begin with, and I mean, pretty much all the research suggests is how a fund starts out, or how a company starts out is how they're going to end up. So if a company starts out with 5 men, it's going to look a lot like that 3 years from now. If you don't have women sort of joining at the beginning, if they're not empowered, if they're not getting funded to start these companies, you're really not going to see much difference 3, 4, 5, 10 years from now. And that's been borne out repeatedly now. So it's kind of like got to be right from not just from pre-IPO, but from foundation. The founders have to be more diverse.
Abby, your take on that?
Yeah, I think you and Jeff are going into a really interesting part about all of this. So we looked at the last dozen IPOs just, in 2020, or what's queued up to go in the next week or so. What's sort of phenomenal is in those dozen IPOs, there's only one company where they've had 2 women on the board for more than a year. All the rest of them have women that are teed up to be nominees upon the completion of the IPO or have gone on within the last couple of months. And I think what's really important is just checking the box and putting a woman or any kind of diverse person on a board falls way short of what the whole point is about having diverse boards.
And what's interesting, Abby, is you take a look at the S&P 500, it seems like some of these multinational, larger cap companies have actually done a better job than some of these smaller startups where maybe there is a bit of a sense of checking the box to get to the IPO. Why is it that some of these multinational companies are doing a better job, and yet some of these startups, which is supposed to be an innovative culture, can't get there?
I think it's all about visibility. Pressure's on. You've got, a broader shareholder base. I think the work of State Street and BlackRock and Vanguard is really sort of coming into bear. And if you think about who picks the board, it is the shareholders, right? So go back to Jeff's earlier point of how these companies are being founded, who's behind them. We need to start at that level, at that earlier stage level. And by the way, bringing more diversity onto your board 2 years, 3 years, 4 years before you go public is going to help that company be more ready to be public. So there's really a win-win.
Jeff, what do you see as you take a look? Yeah, please comment, Jeff.
I was going to say a key part of this is sort of the equivalent of BlackRock or Vanguard saying we're not going to vote for your boards anymore. Now you have this sort of line in the sand for the IPO. So companies are going to be thinking, what do I need to do 2 or 3 years from now to go public? I better be thinking about it now. And I think Goldman learned something from WeWork. I mean, they were part of that, and that was a disaster. They came to the market without a diverse board, and people start asking questions and then more questions, and pretty soon there's no IPO.
Jeff, who is next? Goldman. After Goldman, you had Morgan Stanley, JP Morgan. Who do we expect to come out next?
I don't know. I asked both JP Morgan and Morgan Stanley, and they weren't volunteering it. And if you think about it, we have Citigroup put out some pay numbers. We had Intel put out some really detailed numbers about their workforce and gender and race and pay that no one's ever done before. And they're still the only ones to have done that. So just because somebody leads does not mean somebody's going to follow. This is scary stuff. I mean, if you look at my inbox, my Twitter feed, my LinkedIn, and probably many other people who followed this, it's pretty scary to see the kind of reaction to what they did.
Abby, your take?
Yeah, so I'm going to trust Jeff's reporting. He asked all of them, but I want to know who's first on the investor side. Who's going to step up and say, we will not buy an IPO that doesn't have the type of diversity? The same way that BlackRock came out just 2 weeks ago, Larry Fink's letter that said, climate change, we're paying attention to this. I'm really looking forward to seeing the institutions say, this matters so much that we're not in without doing it the right way.
Sort of brings us back down to activism coming from all different fronts. Bloomberg's Jeff Green and Abby Adlerman of Boardspan, thank you both for joining us.
Thank you.
And coming up, Apple's price target raised to a new street high of $400 at Wedbush. We'll talk to the analyst behind the call, Dan Ives. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Apple could reach a $2 trillion valuation by the end of 2021 on the back of 5G iPhone upgrades and an increasingly valuable services business. That's what Wedbush analyst Dan Ives wrote in the latest example of rising Wall Street optimism. And Dan joins us now. Dan, you know the story. Come and take a look at a chart here that I'm showing inside my terminal. And it is Apple market cap now $1.4 trillion. What is the path to taking that number to $2 trillion in just less than 2 years?
Look, I mean, this is really, I think, halfway through what I view as the 2 to 3 year bull thesis. We're going to go into a 5G upgrade cycle, and it's a super cycle because right now 350 million of the 925 million iPhones are in the window of an upgrade opportunity. Going into this 5G super cycle, I think you combine that with the services business, which we think is worth about $600 billion, is how you have a stock with a 4 in front of it. So even though the stock's had a parabolic move, I think the re-rating and numbers going higher on iPhone demand continues to make us uberly bullish on this theme.
Is the upgrade cycle getting shorter or just not longer?
Well, I think if you look today, you have right now the average consumer, 350 million, have an upgraded phone in 40 months. You go back 3 years ago, that was 26 months. So now you're starting to see that sort of subset of the iPhone population really going into what I view as a massive upgrade opportunity. It's almost a perfect storm of demand along with 5G. And when I look at 5G, and I just came back from Asia over the last 2 weeks, I could tell you right now, looks like line in the sand for units could be 215, 220. I think ultimately you could have even more than the peak year 2015 in terms of iPhone 6. And that's why we continue to be bullish on the name, on the re-rating, as well as numbers going higher.
You know, we had a report out earlier this week that Apple was thinking of introducing a lower cost phone in March. Does that cannibalize sales, or are they just targeting a different audience? Yeah,
different audience. And I view that as sort of the drum roll. That's an appetizer relative to really the main meal being in September, call it the 4 to 5 5G phones at least. And I think that's something where when you look at this sort of interim release, that's really going after some upgrades. But Apple also needs to be careful. They can't price themselves out of the market, need to cast a wide net here, because right now it's putting an armed fence around their install base, not just domestically, but also internationally.
Dan, come and take a look at another chart inside my terminal here, which is a basic PE ratio and a valuation multiple here of Apple. You're looking at multiples of Coca-Cola, McDonald's, Procter & Gamble, big multinational healthy consumer companies. Now Apple is being folded into that bucket. Is there more room for multiple expansion?
Yeah, I mean, historically, this is a stock that's traded, let's say, 12 to 16 times from a PE perspective. And our argument is that on the services side and just the monetizing of that install base now, we're looking at sort of what I view as really a mid-20 multiple. And I think right now the big thing there is services, because services, if you look at that as $60 billion annual revenue stream by 2021, if that's $600 billion, which we believe it is, some of the parts now, you start to look at a stock that's still a significant upside here. It's a re-rating, but I mean, to that point and to many of the pundits, I think you have to look at Apple more and more as a services company, with iPhone obviously continue being the Rock of Gibraltar, but that monetization's the key that we think is just starting.
Okay, so you keep talking about services. Let's go there. What are we talking about? AirPods selling at a record, Apple TV Plus. What do you like within services?
Look, and I think also when you look at AirPods, just on the wearables, I mean, that's going to be 5% of revenue. I mean, I think 85 to 90 million units is what they sell. So I think that just shows the innovation there. But I think, look, when you look at services, you know, from the music to streaming to what you're seeing on Care, as well as just the overall App Store, you're starting to see that now. It's a mid-teen grower. And I think if you look at the average iPhone customer today from a services penetration, only 20-25% in terms of just globally. So I think as that starts to step up, as long as the streaming piece, that services business is going to continue to grow at a pace, and you monetize the install base. And that's why sometimes investors will be like, look at Nokia, look at BlackBerry. right? The doomsday sort of scenarios. The difference with Apple is that it's the retention rate on the iPhone and it's the monetization of the install base. That's the next leg to the Apple story. And that's why right now we're going through a metamorphosis of the upgrade cycle and, more importantly, the valuation.
Biggest number you're looking at when you take a look at earnings next week?
The biggest one's really going to be around China. I mean, you want to start to see China growth year over year going into the next year, because ultimately China is the fuel in the engine. 60 to 70 million iPhones right now are in the window of an upgrade opportunity. Apple needs to show that those upgrades are happening at a pretty brisk pace. And I can tell you, just come back from Asia, I think China 3 to 5% above expectations. That's the key. I think that's the difference. You go back a year ago, many yelling fire in a crowded theater on worries about China demand. And instead, a lot of those consumers, instead of the backlash, they're buying iPhones.
At these types of valuations, I think some analysts would say that there's no room, no margin for error here when it comes to earnings. In your opinion, what is the biggest left side tail risk that could make Apple fumble a little bit?
Yeah, it would be around guidance. If there are any sort of conservatism around guidance from March, any sort of sense that maybe there's some caution going into the upgrade cycle for iPhone 11. Obviously, stocks had a major move. Then you could see a knee-jerk reaction. That would be probably the biggest risk there. But to that point, I think it's forest through trees. I mean, any sort of sell-off here, I continue to view this as a 12 to 18-month bull cycle. And for Apple, that's why I continue to view it as a $400 stock here. Any sell-off, I would view it as near term, and I think you buy it. But I don't really see risk going in, just because, in our opinion, I think it's a $1 billion beat in terms of handicapping it.
Dan, I want to get your opinion as well on Microsoft. You have an outperform rating. What is our path from 165 to 195 on Microsoft?
Yeah, I'd say it's the first.
Microsoft set to report quarterly earning results next Wednesday. And heading into that report, Mizuho Americas analyst Greg Moskowitz upped his price target on the tech company to $180 a share from $160. More bullish sentiment thanks to blue skies ahead for its cloud product. Greg joins us now. Greg, great to have you. One of the higher price targets now on the street. I'm wondering, though, if cloud really can live up to its expectations.
Thanks, Taylor, very much for having me. We think it can, and what we're seeing and hearing is that Microsoft's cloud momentum is really just going extremely strong. There's been some concern from a macro standpoint, some uncertainty with respect to IT spending. We're not hearing that about that as it relates to Microsoft. They're extremely well positioned. They are clearly taking share in Azure. The Jedi contract that they won late last year, we think is going to be a facilitator for broader, more strategic deals, both with the government as well as other large enterprises that they don't have today. And at this point, we're really not seeing any demand signals that would indicate any sort of softening. So we feel pretty good about that.
Greg, does Jedi contract go through even with the lawsuit coming from Amazon?
Certainly that adds some friction, but ultimately we don't expect any alteration in the outcome of this. We believe that Microsoft will continue to have that contract. We think they will have it officially awarded and be able to move forward with it. Timing is a little difficult to say, just because obviously you have to go through the process. But again, we're not expecting any change to the outcome.
Greg, I want to take a look at a chart here that I'm showing inside my terminal. I'm using a little bit of a basic forward PE business, which shows sort of the rate of change going along with the stock. You get that nice curvature there going up to about 20.5 times. Your smart analysis, you're looking at EV to free cash flow, also multiple 29 times currently for 2020 estimates. What really gets you to that valuation?
Sure. So that is what our valuation implies. What I would point out, though, is we actually look at our primary valuation being a function of two things. One is we do a DCF on the Azure business, and we have an estimate of roughly $70 for Azure alone. Now, if you look at Azure relative to the piece of the pie that is, or as a piece of the pie that is Microsoft's entire business, Azure today, by our estimates, is about 13% of revenue. However, it is remarkably strategic, as we we've been talking about, it is going to get much bigger. In fact, we estimate it's going to be 20% of their revenue in June of 2021. That's only 6 quarters away. So again, there's a lot more value that's going to be accruing to Microsoft. In addition, we do a sum of the parts for the entire business, and by doing so, we get to about $180, hence our price target. Now, if you look at Microsoft over the next year or two, that 29 times multiple, Taylor, is what it equates to. It is certainly higher than what we've seen in the past, but the difference as it relates to Microsoft is how much better they are strategically positioned vis-a-vis where things were 3 to 5 years ago.
Greg, we have about a minute left. I wanted to make a pivot to some of the cybersecurity stocks you cover: NortonLifeLock, Checkpoint, Proofpoint, Fortinet, FireEye, CrowdStrike. You know, the list goes on. How do you see some of the recent cyber threats via maybe Iran or the Saudi Arabia hack of Jeff Bezos' phone change your story as it relates to cybersecurity stocks?
Sure. So I would say at this point, any change is speculative in nature, and I say that because we have yet to hear of any escalation in cyber attacks from nation states or otherwise in the immediate aftermath of this. However, I will tell you that we've spoken with some industry folks, and what they've indicated is that very recently CISOs, CISO, or Chief Information Security Officers, they are getting more attention, more airplay, if you will, from their C-level executives, their board members, as it relates to security. Now, it's too early to say how all of this will play out, but we do think that this could be a potential catalyst for some incremental security spend.
Yeah, very interesting. Greg Moskowitz of Mizuho America, thanks for joining. And coming up, the hack heard around the world, our weekly look at the best in tech. That's part of it. All next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. And now our biggest stories of tech this week. U.S. lawmakers are expressing concern over the alleged hacking of Jeff Bezos' phone by Saudi Arabia's Crown Prince Mohammed bin Salman. Senator Mark Warner, the ranking member of the Select Intelligence Committee, telling reporters that, quote, if it's true, it is remarkably serious. It shows that even if you're one of the wealthiest guys in the world, you're vulnerable. There are clearly intel ramifications when we think of Americans, prominent or otherwise, and campaigns, prominent or otherwise, that are subject to foreign-based attacks. To discuss in New York, it is Bloomberg Opinion's Tim Colpin, and in studio with me, Bloomberg Technology's Global Executive Editor, Tom Giles. Tom, what has been the tech response to all of this?
Never click on an attachment from the Saudi royals when you're on WhatsApp. I think that's one of the big takeaways. But no, more seriously, as you said, even the wealthiest guy in the world is vulnerable. And this was a fairly straightforward, Saudi Arabia allegedly outsourced this software. The researchers have identified a couple of different companies that might have supplied it. And it was embedded in a message that was sent via WhatsApp. Mm-hmm. And it's not clear whether this is something that Jeff Bezos clicked on or there was some kind of an auto-download, auto-play function in place on his phone. Either way, this is not a super sophisticated attack. This was just some, this kind of interaction that you have with somebody that you know. And so it does indicate that everybody's vulnerable. It also, it should be a wake-up call for people to, once again be reminded about the kinds of information that you're receiving, what you're doing with it over your phone, and just how much information can be taken. It's not clear yet, but I mean, what we think might have happened is that the information that was gleaned off of his phone was later used against him in a blackmail situation.
Tim, as you take a look sort of at malware, cybersecurity, the way we communicate with each other, what sort of risks does this pose in your world?
You know, it's all about risk and return, risk and trade-off. Do you want to have convenience of being able to send a message to the Crown Prince of another country, or do you want to use snail mail and so forth? That's really what it comes down to. But these days, we know about what's been happening at Facebook. We know that email itself is risky. You click on a website and you can be having all sorts of malware downloaded. But most people, they kind of don't care. They think out of sight, out of mind. I'm not Jeff Bezos, so it's not going to matter to me. No one's going to try and hack me. Most people believe that they're not a target. And so, frankly, people just ignore it. And it's really when something really happens to them personally, or the risks are enlarged enough that people will take it seriously. So, this is a big case. And, Jeff Bezos has been targeted. Who would have thought? But most people are going to ignore it and move on with their lives.
Tom, we have a soundbite from the UN coming out and saying that a lot of this was because there isn't a lot of controlled regulation. Take a listen.
It demonstrates to the international community that we are dealing with a technology and an industry that is not controlled, that is not traced, and that can have serious implications for human rights. So it's particularly important for the international community to wake up to the dangers that this uncontrolled industry represents at the moment.
It is really easy in this world to blame it on a lack of regulation. Is that the solution?
That's what the UN has called for. What we've seen, I think we need to take a closer look at this industry and look at how it has developed. It's gone from, in the last 10 years or so, spyware was this kind of thing that you heard about, like you can get it from the dark corners of the web and use it to in a creepy way, spy on like an X or something like that. Now it's become a multi-billion-dollar industry where law enforcement has a genuine interest in using some of these solutions to nab the bad guys. The problem is, it's also being used by the bad guys, allegedly. And sometimes it's been proven to be used, repressive regimes that want to crack down on civil rights activism, want to crack down on journalists. So it goes both ways. And I think what this does is it shows just how prevalent it's become, how sophisticated it's become, and that we need to take a closer look at it.
Tim, I want to fold back over and go into your world, and that is back over in Asia. We're taking a look at the Chinese internet giant ByteDance was taking a look this week at perhaps getting a new U.S. CEO for its TikTok business. What do you make of that?
You know what, I think TikTok and ByteDance would love it if we stop using the term Chinese company. That's really what it comes down to. I think they're trying very, very hard to shake off the image that they are a Chinese company. I think that they want the world to see TikTok specifically to be, if not American, at least not Chinese. It's worth remembering that there is a Chinese version of TikTok called Douyin that's also very popular. And so they're trying to show the world that this is a separate company, a separate app. It's got nothing to do with what's happening in China. So they want to hire a CEO for that company. It's worth noting that they announced just yesterday that they've hired a 20-year veteran from Microsoft to be their general counsel, Eric Anderson. So that's another positive move forward for them to basically shake off this "we are a Chinese company" kind of image. And I think we'll see more and more of this going forward. We're seeing more hiring in the United States, in Culver City, also here in New York City. And so we're going to see that going forward for ByteDance this year and even into next year.
And Tim, we're lucky enough to have you in New York this week, but typically you're based in Asia. Has the Asian response been as visceral as perhaps the U.S. response?
I wouldn't say so. I think a lot of people outside of China are very aware of what you get when you're dealing with a Chinese company. But I think a lot of people don't care that much. I mean, it's only videos, right? What's there to worry about? That's generally the way people view it. It's not a social media chat app like WeChat. Certainly throughout Asia, people are more and more wary of WeChat, which is a Tencent product, not a ByteDance product. So people in Asia are using things like Line, WhatsApp, Facebook Messenger, and I get the irony that goes with using, say, Facebook over WeChat. But people are kind of pretty cognizant of the difference between these kinds of apps, and they're making decisions accordingly.
And Tom, your perspective from the U.S. side.
Well, remember that this is a company that's under a lot of scrutiny right now. CFIUS looking at the deal that resulted in the creation of this big, global, very popular site called TikTok, and they're, if they were to come out and say to ByteDance that somehow you need to ring fence or divest of this business, like we saw happen with Grindr, for example, is it a threat to the security of the people who use it? A lot of law enforcement are on TikTok making fun videos. A lot of kids are using it, obviously. And so there is this question. CFIUS is looking at it very seriously. The last thing ByteDance wants to hear from the U.S. government is you got to separate that out. So they really want to make it look, as Tim said, like an American company.
So finally here, I want to push it forward to next week, where we're going to get a lot of interviews. So Tom, let me start with you, because you're here on the ground in San Francisco. You've Apple, Facebook, Amazon all coming at these record highs, at these multiples, at these big valuations. What company are you really looking for to see if we can sustain this rally?
I think the biggest question marks surround Amazon, right?
Wow.
And it's a perennial set of questions with them. It's the amount of money and investment that they're making in their data centers and the servers, and in the next day or one day delivery. Is that investment paying off? And the question is, was the holiday shopping season as robust as it needs to be in order for them to really reap a reward from all of that investment? The sense we're getting from Wall Street is there's a big question mark, and there's a lot of concern and skepticism about whether this quarter was as robust as it was for some of the other companies. Apple and Facebook, there's a lot more bullishness.
Tim, your take. What are you looking at for next week earnings?
Yeah, I agree with Tom on AWS and Amazon. I think that's going to be a fascinating thing. Beyond that, look, it's hard to ignore Apple. It is the iPhone quarter that we're going to be looking at, so everyone's going to be passing the numbers every which way. They don't put out specific iPhone shipment numbers anymore, but we'll be looking to analysts and others to try and work out what's going on there. Back to Amazon, actually, you'll be looking closely at Microsoft as well. What I'm seeing is that the growth at AWS services is slowing a little, but we're actually seeing a pickup at Microsoft for their equivalent cloud services. So I think there's certainly in the startup scene and other areas, I'm hearing that people are going a little bit cool on AWS. It's not the hip cloud offering, but people are still kind of interested in Microsoft's offering. And of course, they've got Alibaba and some others to choose from as well. So I think if you look at the various cloud offerings out there, I think that'll be an interesting story in the next few weeks.
Well, my favorite segment of the week, and I managed not to screw up Tom, Tim, and Taylor all in that segment. So thank you to Tim Colpin and to Tom Giles for joining us. Now, technology is rapidly changing the automotive industry, and Volkswagen has recently announced several new partnerships and pushes into the electric vehicle market. In Davos, Volkswagen CEO Herbert Diess discussed the shift in the industry.
I think it was a positive meeting. I had a chance to talk to the administration, Secretary Ambassador Lighthizer was there, and Mr. Mnuchin. So, and we did a lot to prepare. We invested heavily to adopt to the new after NAFTA regulation in the United States, investing heavily. We just had groundbreaking in our plant in Chattanooga to double up capacities. We soon will put all the machinery there to ramp up production for a new EV, electric vehicle for the United States. We are investing in battery capacity in the States. So we're doing what we can to avoid tariffs.
How convinced was he, Mr. Diess? Because President Trump left Davos saying tariffs are still on.
Yeah, I think he's still very committed and serious about it. I think the administration is happy with what we are doing.
But when you say committed to tariffs, committed to opposing tariffs?
It's very difficult to read President Trump, but he stated that he's still not happy with Europe.
When you look at your biggest concern, is it market decline in China or is it tariffs?
Generally, I think 2020 for the automotive industry will be a very difficult year because markets are basically flat. Probably we see slight growth in some of the markets. In Europe, we have to comply with the fleet targets, emission CO2 fleet targets, which we have to make sure that our electric vehicles make their way. We are well prepared, and we are optimistic. We come with a lot of new products, so we're basically optimistic, but it will be a very demanding year for the industry.
Mr. Dees, a very, very interesting time for the auto industry. If you take a look at Tesla's market value surging past Volkswagen, I mean, how do you explain why investors are putting money in a company like Tesla, which is not making money yet, compared to a company like Volkswagen? I mean, Tesla is burning cash. You're making money.
Yeah, you know, the market evaluation tells you something about the future, future expectations. And Tesla is having a product which basically describes the future of the auto industry, a fully connected electric car. And so there's a lot of evaluation about the future car. And I think Tesla is paving the way there. It's modeling something new for the industry. I think we are close to follow, so we are quite optimistic that we still can keep the pace with Tesla and also at some stage probably overtake.
Keep the pace, overtake. The question really, eventually, who will win in this, tech car space? Will it be, traditional car makers like yourself, like Toyota or Tesla, or, players like Google?
I think it's an open race. I would take Tesla more seriously than Google, and there are also from our peers some very competitive companies like Toyota. But it will be, I think, the company which adopts fastest and which is most innovative, but also which has enough scale in the new world, will make the race.
That was Volkswagen CEO Herbert Diess. Coming up, Poshmark wants to disrupt the retail industry, and it has the support of tennis star Serena Williams. We'll explain. This is Bloomberg. Transforming the retail industry, that's what Poshmark aims to do as a social commerce platform. Launched in 2011, the company has a mission to build the world's most connected shopping experience. For more, I'm joined by Poshmark co-founder Tracy Sun. She spent the last 15 years between New York, my home, and Silicon Valley here, and she is our latest guest as part of our Retail Transform series. Great to have you. How do you differentiate yourself from competitors? I'm thinking like The RealReal, for example.
Sure. So what we're really focused on is we take social and we take commerce. We blend it together in a way that's really unique that hasn't been done before. So what we really focus on is using technology to help people connect to one another in the Poshmark community. And often it's through their love of fashion and now home, but it can also be about what's going on in their lives. It's a true, authentic connection.
Do you ever plan to expand and do the reverse and go into retail stores, or do you like to be just online?
Well, it's really interesting to see what's going on in the physical world today. So many things are changing in retail. It's been really fun to watch. You see D2C brands that were born online that all of a sudden are opening up stores, and then we have physical retailers who, own the physical space, really building robust omnichannel strategies. So for Poshmark, because we're such a unique player in the space, for us, physical is going to look different, right? And so what we do is we actually have a very robust physical strategy today. We personally host, our company hosts, but our community also hosts over 1,000 events and meetups across the country every year. And so these are places, because we think connection is so important to commerce, we spend the energy hosting these meetups where people can connect with one another, and then they bring those relationships online into Poshmark.
What are some of your international expansion plans?
Yeah, so last year we expanded to our first international country, which is Canada. The reason we went there is we just got so much positive feedback from our community saying, please, please launch in Canada. And so that's always been top of mind for us. So Canada's been quite successful. And so what we really see from that is that this human need for connection and commerce transcends just the US. So our Canadian shoppers are really happy as well, and we'll continue with that strategy.
It's interesting, a lot of people are also trying to expand into China. You have the coronavirus, you have Hong Kong political unrest, you have Hong Kong retail sales falling, and a lot of luxury goods taking a hit there. How do you see yourself going into China in the midst of some of this unrest?
I think that any company that's pursuing an international strategy looks at China as such a big and interesting market, and that's something that we're thinking about, but we don't have any concrete plans to discuss today.
The RealReal went public, so I wanted to ask you any plans to go public or IPO?
We are so focused on growing our community and growing our business and scaling our business. Of course, when you get to the size that we're at, there's a lot of options that are available to us, and we think about them, of course, but we have no plans to confirm at this time.
You know, we also had another story out today about Goldman Sachs not going to help a company go public or IPO if they didn't have at least one female director on the board. What are some of the ways that you're incorporating diversity? I mean, you're a woman, so you're leading that charge. How else are you incorporating diversity to make sure it starts from the beginning before the IPO phase?
Yeah, well, I think that's fantastic news about this. We have a lot of diverse people that we involve in the company. I really think it starts from the top and then it comes down, right? So for example, really happy to share that we added 2 women to our board last year. So we have Serena Williams, who is a savvy businesswoman, a really prolific tech investor, and just a very iconic female entrepreneur in the fashion space who loves our community. So it was great to add her to our board. And we also added retail veteran Jenny Ming from Old Navy, Charlotte Russe, Gap. And so she brings so much merchandising expertise and retail expertise. And so it's really important to have such diverse voices that come from experience from other industries, add those voices to the table, and then everything trickles from there.
Well, wonderful conversation, all things Poshmark. That is Tracy Sun. Thank you for joining us.
Thanks for having me.
And it's still ahead, investing in the next generation of trillion-dollar sectors. We'll hear from an early investor in Beyond Meat. That's next. This is Bloomberg. Obvious Ventures believes that Beyond Meat is going to reimagine the trillion-dollar healthy living sector. And so it was an early investor in the plant-based meat producer. Managing director Vishal Vashish co-founded Obvious Ventures with Twitter co-founder Ev Williams back in 2014. In January, the firm closed its 3rd funding round at nearly $272 million. So thank you for joining me here. So I wanted to start with Beyond Meat. Come and take a look at a chart here that I'm showing inside my terminal for our audience, basically showing since the lockup expired, you've had a lot of people sell and get out, and you've had short sellers come in. Were you guys worried at all about the lockup period and selling some of those shares?
Right now, if you look at the food industry, we are going through a massive transformation in the food industry, driven by consumers wanting to eat more healthy and sustainable food products. One of the theses which we've had at Obvious Ventures is reimagining animal-based proteins with plant-based alternatives. And Beyond Meat has been a great disruptive solution for that particular strategy. We are a long-term investor. We were very early on as an investor in Beyond Meat. And then the company has done extremely well over the years. Over the year, it has been in the IPO markets.
There's been some concern about demand, particularly when we go over to China and you take a look at companies like Beyond Meat trying to make inroads over there, but you've had that coronavirus breakout. Does that worry you at all as you're thinking about some of the expansions into China and the effect that that virus could have?
You know, I think it's a great, first of all, it's so unfortunate what is happening in China. But as you look into why these outbreaks happen, a lot of times you'll find that animals are responsible for those kind of outbreaks. So this is a great opportunity for the food industry to innovate and come up with much more innovative solutions, much more safer solutions. And so companies like Beyond Meat are really well positioned to provide that need.
So $272 million funding round. Where are you going? Where are you investing the money?
So Obvious is most known in the Valley for incubating companies like Twitter and Medium. Mm-hmm. And 6 years ago, we started a new venture fund with a shared belief that inspiring purpose-driven businesses reimagining trillion-dollar economies are going to outperform their peers. We've been investing all around that idea in multiple domains. In food, we have invested. We've also invested in other areas such as transportation, reimagining the combustible engine towards electrification. We've invested in, and so there's a company called Proterra, which is part of that thesis. We've invested in another area in resources, reimagining the resource industry towards more sustainable resources, more local production of resources, a company called Diamond Foundry, which is building gem quality diamonds in a lab. We have invested reimagining stock exchange to think about long-term, to bring more long-termism into public markets, a company called LTSE.
Yeah, do you see a lot of that expansion happening overseas in China? Or are you really focused on US-based companies for now?
We as a firm are mostly focused on North America as a market.
Well, that was a fascinating conversation. Vishal Vashish of Obvious Ventures, thank you for joining us. And that does it for this edition of Bloomberg Technology and Bloomberg Technology live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.